Привет! Смотри, это настоящее секретное орудие рыбака. Ловушка для рыбы «Миллион». С такой
опасного форварда. Адурис – рекордсмен клуба в 21 веке по количеству голов. Всего в футболке команды он забил 172 мяча. Игрок хотел завершить карьеру победой в финале Кубка Испании.
Но сближают тысячи разговоров. И я тебя.
С кем ты так долго разговаривал?
С одной умной кофеваркой из Владивостока. Ты ее не знаешь.
Мы отменили межгород. Звоните на любые номера России. Это уже включено в ваш тариф «Близкие люди».
Алло, Тула, можно я со своей кофеваркой приеду? Нельзя? Даже с умной?
Билайн, живи на яркой стороне.
Мы так не похожи, но огонь горит под кожей. У тебя есть цель, у других есть тоже. Кем бы ты ни был, тебя будет ждать успех. Уралсиб, кэшбэк, прибыль для всех. Карта виза, прибыль от Уралсиб, выгодна для всех.
Linux Forte постепенно восстанавливает баланс во всем кишечнике. И после...
Ясно, реклама.
мы продолжаем общаться с представителями бизнеса по поводу текущей кризисной ситуации и путей выхода из нее. И сегодня с нами на связи Виктор Семенов, основатель группы компании «Белая дача». Виктор Александрович, я вас приветствую.
Здравствуйте.
Ну, с моими коллегами вы уже успели пообщаться, но с этого момента прошел почти месяц, поэтому у меня вопрос следующего характера. 12-го мы узнали, что режим нерабочих дней, собственно, уходит в прошлое, и вроде как мы должны выйти на работу, но при всем, что самоизоляция в Москве и Подмосковье сохраняется. Вот мне интересно, шуток на эту тему, конечно, в интернете очень много, работать можно, но вроде и нельзя, но как это для себя трактовал бизнес и вообще какая активность в вашей группе началась с этого момента?
Ну, во-первых, все-таки это приятный такой звоночек, хоть какая-то маленькая форточка открылась все-таки, да, но для нас это, к сожалению, только один проект реально заработал. Это вернулись строители на наш совместный проект с группой компаний «Пик». Это тоже очень важно, потому что проект, он не только коммерческий, но он очень важный, социальный. И смотреть, как стройка не горят огни, это вообще всегда было очень печально для меня. Тем более я прям живу и напротив наблюдаю всю эту стройку. Ну вот. Все остальное пока в том же состоянии. К сожалению, оба торговых центра пока стоят, хотя мне не совсем понятно, почему власти не замечают, например, на такую форму торговли, как аутлеты. Они говорят, что вроде бы как малые формы торговли не продовольственными товарами можно открывать, там, где можно обеспечить именно санитарные нормы людей. Но у нас мало того, что это можно это все обеспечить, хотя вроде бы как торговый центр, но посмотрите, что такое аутлеты сегодня. Это маленькие магазинчики, которые находятся на специальных улочках, где можно обеспечить контроль, охрану и организацию людей, да. И более того, это и экономическая активность какая-то, но и возможность людей безопасно прогуливаться, да. То, что так востребовано сейчас людьми, люди устали от сидения в запертых этих тесных стенах, да. А тут, представляете, полезное с приятным, два в одном флаконе. И мы хотим до властей сейчас донести, что вот как раз аутлеты, это...
Ребекка Джонс создала специальные приложения для точного мониторинга ситуации с COVID-19. В письме Джонс, попавшем в СМИ, говорится, что ее просили вручную изменять данные, чтобы штат побыстрее получил разрешение снять ограничения. Джонс отметила, что ей не заплатили за 2 месяца напряженной работы. При этом во Флориде уже начали постепенно снимать ограничения. До 60 миллионов человек могут оказаться в крайней бедности из-за коронавируса. Эти цифры приводит Всемирный банк. Там подчеркнули, что пандемия сведет на нет 3-летнюю работу по сокращению бедности. И банк на этом готов заработать. Пообещал выдать кредиты на $160 миллионов самым уязвимым странам. Это были главные новости. Оставайтесь на РБК.
Ты такая далекая, но такая близкая. Нас...
What is that prediction I have for 2020? Simple.
So what does the stats report say about Moderna's study?
Good morning, Nara. Well, what a difference, I have to say, 24 hours makes. We were here yesterday talking about the fact that Moderna had this record high in the market, but there seems to be some cold water with this health.
The banks, I mentioned them at the top. I would say this is a new paradigm shift. I speak to people at home in London and in New York. One person on a desk, one person on a whole desk. So we're talking about a fundamental change in banking and how it's conducted. Give me the numbers.
Yeah, exactly, Manus. And this is what the banks are doing. They're basically mapping out plans for a new normal. JP Morgan is looking at saying that they want to keep their offices half full for the most of the foreseeable future. Goldman, when they reopen Paris, maximum 20% of staff on any given day. In Frankfurt, they're dividing the teams into 3 groups that can rotate between working from home and in their 2 other offices. And then Citigroup here in the New York area are looking at leasing office space outside of New York City proper, so in New Jersey or Westchester or Long Island, because one of the biggest problems is going to be the mass transit, getting people into Manhattan, into these hubs. And then whether you're a banker in London, Canary Wharf, or in Wall Street, Manus, what you were talking about there, where you sit, how close you are to your other employee, if there's a cafeteria, how does that food operate, how does that look, how many people can you go into an elevator with? All of this is being questioned, and it's going to look very different if you're that person getting into that Manhattan or Canary Wharf headquarters.
Always good to have you with us. I'm just wondering, in the end, at the end of the day, the sentiment remains quite strong, remains solid. I mean, this market seems to suggest that perhaps you can't fight the Fed, you can't fight central banks. No bad news will meaningfully dent the sentiment.
Hi, Hazelinda. Well, I'm not sure I would be that positive about the sentiment. I think the correction that we saw in March was sort of a classic correction, if you like, with all the things that happening in the normal order. But the rally has been very different. It's been very defensive in nature. A lot of defensive assets like gold have also done very well. Normally you wouldn't expect that in a recovery rally. And certainly defensive sectors within equity markets, for example, have done extremely well. So I think tail risks have definitely declined, and we've got this massive monetary and fiscal action by the Fed and other central banks and governments. But I'm not sure if that's yet turned sentiment entirely positive. I think people are still very, very cautious.
So what's the path forward? VIX under 30 right now.
Yeah, it's still falling. I mean, I think for equities, what people are focusing on are earnings, and it's obviously very difficult to get a handle on what's going to happen to earnings in 2020. There's a couple of different ways you can try and get a handle on this. You could try and reverse it out of GDP forecasts, which are in themselves a bit uncertain, but perhaps a bit easier to do. That sort of tells us that earnings are going to be down 20, maybe 30%. You could look at what the market's implying. At the trough of the markets, it looked like the market was implying about a 50% correction globally in earnings and a very slow recovery. So I think that's what people are focused on. At the moment, it looks like markets are kind of more or less where they need to be, which doesn't mean there isn't value there. That still gives us an equity risk premium and an expected return of high single digits. And in an environment where you've got zero rates, that's a pretty decent deal. It's just a very uncomfortable place to be in equities in a risk asset like that.
Bill Stanley Druckenmiller is saying that he'd never seen a worse risk-to-reward ratio in his life. What's your take on such a comment?
Well, look, he's obviously he's a very impressive man with an amazing track record, but a lot of investors like that can turn on a sixpence. They might be very short one day and very long the next day. So we're trying to look at a bit longer than that. I think he was partially referring to EMs as well, not just DMs. And I think there the risk reward is a little bit more challenging. They're in lockdown like everybody else. They've got FX going against them and local currency spreads going against them. Many EMs are also petrostates, and with the oil price and the volatility, that doesn't help. And of course, ultimately, they're exposed to the slump in Europe and the US because they manufacture stuff that consumers in the West consume. And they've got ballooning twin deficits. So I think now in EM, you need to be very selective. For us, Asia looks like the pick of the bunch, particularly North Asia, Taiwan, Korea, China, Hong Kong. And I think you do need to be very, very selective on a country basis, which is a big change from the last few years where there was a bit more of a homogenous kind of outlook.
Bill, there's a question I've been asking this morning of our guests, and that is, there's a lot of stimulus out there. We've got central banks addressing liquidity, but what about solvency? That's the danger, isn't it? And how do you deal with that? Because many companies are likely to go to the wall, and we've already seen several of them in the US.
Yeah, so look, ultimately, I think for many companies, the issue is starting as a liquidity issue, and of course, ultimately, if that's prolonged, that can lead to a solvency issue. We and most others are expecting default rates to pick up, but not to very disastrous, very challenging levels. And there's nothing so far that's happened that really challenges that view. Some sectors are worse impacted than other sectors, for sure. Some countries are more impacted than other countries, so there's variation within that. But I think the liquidity support measures that are in place around the world, with the ECB, Bank of England, especially with the Fed, that's helping companies all the way down the spectrum. It may only target large companies or middle-sized companies, but helping to provide funding there has a trickle-down effect and helps all. So I think so far it's okay, but you're right, because ultimately it can lead to a solvency issue, we need to watch that.
Very quickly, Bill, what out of all the your clients, what's their biggest concern? What question do they keep asking you? Very, very quickly.
The answer that keeps getting asked is, why do equity markets appear to have disconnected from reality, from the economy and the virus? And that's the answer I gave, that actually they haven't. But it's difficult to get a handle on that because people are so worried and there's so much uncertainty. But that's the biggest question, I think, on people's mind.
Bill, more and more companies are saying that they're willing to let their employees work from home post-pandemic. How do you trade on this expected shift in behavior?
Yeah, look, I think there will be a shift in behavior, but it is very difficult to trade on that. There are trends, there are themes out there that are really good themes. They're real, they're going to happen, but they're not always tradable. Maybe at the margin, maybe in terms of certain equipment manufacturers, maybe in terms of certain types of real estate. There's a few ways you might be able to do it at the margin, but to meaningfully tilt a portfolio in that direction, I think on that specific trend is going to be very difficult.
Думаешь, что делать дальше? Делай ремонт, а Петрович доставит все, что...
So, is this the right time to get on that road to prosperity?
Thanks very much, Rishad, for having me on the show. What we're seeing at the moment is a real flight to quality for sort of our investors as a general rule. So, and taking advantage of certain dips in the market and the volatility of the market to buy what we consider to be very high quality stocks at very favorable prices. So we do see there's a lot of opportunity in the market despite the pandemic and the toll it's taking on people's lives and families.
Is there a particular asset or asset class or sector that you look at the moment which you see surprisingly knocked down valuations and good quality, as it were?
Well, we've been looking more and more at acquiring quality real estate for two reasons. One is real estate values have not so far plummeted in good locations. In fact, we only see about a 5, maybe 10% adjustment during the worst period of the pandemic to date. And we also are looking at those kinds of assets because they generate ongoing cash flow if you have, of course, the right kind of tenancy profile in the building and you have a good location. So we see our investors seeking out these kinds of assets with a real flight to quality, real flight to location, and a lot of investigation into the quality of the tenants, so that there's less risk on being caught out without being able to either sell an asset, and if you want to hold an asset, being able to generate cash flow while you do that.
But maybe
the other area we've been
seeing companies, banks, for instance, in the U.S. Just to follow up on real estate, Ming, we've heard from bank CEOs perhaps saying that, they may downsize, move, their offices to cheaper areas. Could that be a risk to your investment in real estate?
Yeah, we do see that, but what we've been looking at what we're currently looking at are properties where the tenants are likely to benefit from people having to social distance and to be less, out in public. So we just did a recent transaction where we closed in the middle of, sort of end of March, beginning of April, in the middle of the pandemic, of the peak of at least this round of the pandemic. Knock on wood, there won't be another one. But and we were very confident in closing that transaction because the tenants were benefiting from the fact that people were not going out to restaurants and so on and so forth. So one was a tech company, and the other one was a credit card company who is seeing a big pickup, obviously, in online bookings. So I think you have to be selective in what you're looking at. We're also looking at properties that are occupied by logistics companies as well.
In recent years, Ming, we've seen a lot of Chinese money flooding the real estate market overseas. With the rising tensions within the U.S. and China, do you see, those investors coming back and putting their money in Chinese real estate and boosting the Chinese real estate?
Well, I think that's a tricky question. We have not seen a lot of inbound money going into China at the moment with our investor base. I think there's a lot of concern about being able to get money out of China still, which of course you can do, but as you know, it's been more difficult the last few years to get money out of China so easily. And I think there's concern in the market, in the international market outside of China, that there's still a lot of, let's say, corruption domestically in China, and real estate is an area where you have to really choose your partners well, because we don't basically do anything in China anymore unless we have local partners on the ground that we've known for a long time and who have good track records. I think it's really important to have local relationships, to be very much local on the ground, whether you're investing in real estate, or we also invest into a number of private equity funds and do direct investments, but we always do it with local partners. So you have to be very selective. We have not seen money going into China from our investors actively, even though arguably there are opportunities to do so.
Ming, just looking into ETFs, for instance, exchange-traded funds, how are you using those? How are you using passive investing in all this?
So what we do with our portfolios is we tend to have a hub-and-spoke approach. Our clients and with our own proprietary money, we're not actively trading, so we don't want to act like a hedge fund or think we're as good as a hedge fund. I think those guys are doing their jobs because they're really good at what they do. So we tend to be a little bit more conservative in our perspective, in our asset allocation. So what we tend to do is to do a very core portfolio in ETFs and asset allocate relatively conservatively amongst that, and just basically trying to get beta exposure and liquidity. And then what we do is around that, we will take opportunistic bets on, for example, we recently took a little stake in ExxonMobil when the stock price dropped, and we're pretty happy with that because it's paying a very high dividend. We feel that although the oil industry is taking a hit at the moment, that will not be a long-term trend going forward. We did the same with some tech stocks, including Alibaba, for example, and Tencent. When there was a big dip in the market, we took some positions there, adding on to our spoke, as you may call it, to sort of take advantage of the volatility in the market at the moment. But that's not a huge part of our portfolio, so we try to keep the ETFs, passive, but it's also a liquidity play for us and keeping cash available in the event that we do see other good opportunities.
Is there reason to think you should pile on tech?
Yeah.
Tech has been supporting this rally and may continue to do so.
Yeah, for example, one of the companies who was a big tenant in the recent real estate transaction we did is Aviva. So Aviva is actually benefiting greatly from like broader broadband use, basically. So there are specific sectors within the tech that we're looking at more carefully to see how they might benefit. As I mentioned, logistics is another area, and those groups, logistics who have hub and spoke, also sort of infrastructure. We're looking at investing in another real estate deal, for example, that has a very well-known retail logistics third-party provider company as the main tenant. So we do think that in tech, there are companies that are going to benefit because of the fact that people are staying home more and are unable to go out as much. So it really depends on whether we end up buying stocks to take advantage or express that particular view, or looking at real estate to combine that view with our underlying view of real estate being a relatively strong asset in good locations. I know in some major cities, like in the U.S., where we're looking at, we're seeing a lot of movement in the real estate market, where, as you mentioned, some companies are saying we don't need to pay expensive rent for some of our employees, but there is a lot of subletting going on within that, interestingly enough, and I was surprised to hear that recently. So I still think if you are in a good location in real estate, the longer term, that will end up being a reasonable play for you.
Хотите купить квартиру, но у вас маленький официальный доход? Если это не про вас, пропускайте видео. Или регистрируйтесь на мой бесплатный вебинар «Риэлтор на миллион» и смотрите дальше. Меня зовут Ксения Якимова. Я бизнесмен с 14-летним опытом. Моя компания Trend House крупнее.
Let's start with Japan. Some signs of progress, some relief.
Yeah, the country has seen a steady fall in confirmed cases over the past few weeks, and they do have the lowest among infections among the G7 countries. So Osaka could be lifted along with Kyoto and Hyogo, according to some local reports. And those three could join the rest of the 39 prefectures where emergency measures were lifted 1 week ago. But Tokyo, as you say, surrounding areas there, and Hokkaido will continue a state of emergency. They were slightly above the government's threshold of 0.5 new cases per 100,000 people in a week, according to some reports. But they are on course to be under that threshold before the end of the month. But the Prime Minister Shinzo Abe said to make that formal decision later on today. And over in the Philippines, we're also seeing the government there weighing downsizing their lockdowns to villages and regions now. We've already seen parts of Manila where malls and some businesses have been allowed to open as of last week, but the government's still concerned about a possible resurgence in cases. There's still some 42,000 migrant workers that are set to arrive until June, and that may well overwhelm the country's quarantine facilities. Already, more than 27,000 repatriated workers are staying in isolation centers in the capital. So the president, Rodrigo Duterte, not ruling out bringing back stricter curbs if there is a second wave.
And a surprise in India, Vaughn, is allowing airlines to resume domestic flights despite the faster surge in cases in India. Sounds like a gamble.
Yeah, and sources tell us that airlines were actually caught off guard by that tweet from the aviation minister. Many airlines had suspended airline ticket sales until June the 1st. So they were expecting perhaps a longer stint of this, but this short notice now makes it harder for the airlines to prepare for operations, get staff back at work, and arrange for protective gear. And this marks exactly 2 months after a lockdown that grounded 650 planes in the country. The Prime Minister Narendra Modi trying to gradually restart the economy, even as you say, infections are jumping at the fastest pace in Asia. And state governments have expressed some concern that perhaps that they're allowing people now from these so-called red zone areas or places hit hard by the virus to enter their borders. So far, major centers like Delhi and Mumbai are still considered to be red zones. So the aviation ministry is going to lay out some new rules and regulations that will be put in place. But we have seen airlines around the world struggle to remain in business. And India is home to some of Airbus's and Boeing's top customers. The carriers have ordered more than 1,000 planes in recent years.
Yvonne, let's just shift to China here, and there's some evidence that the coronavirus is mutating. How so? Is it coming back in a more virulent form? What's the deal?
Yeah, so they're seeing differences between Wuhan and now this cluster of cases in the northeast part of the country, where patients in Jilin and Heilongjiang appear to carry the virus for a longer period of time, and they take longer to test negative as well. And it's also taking longer than that typical 1 to 2 weeks for people to start developing symptoms. So perhaps it's making it a bit of a challenge for authorities to really track these cases before they spread. They are seeing more family infections in these clusters now. So scientists are still trying to figure out, A, is this virus actually mutating? Or B, they're just observing these patients more closely at an earlier stage from Wuhan. Keep in mind, back then when the outbreak first exploded there, they were only able to treat most of the serious cases. But what we do know, officials are saying that they believe this latest cluster may be actually linked to arrivals from Russia, which is now one of the worst outbreaks in Europe.
Мы сделали инвестиции простыми и понятными. Больше не нужно изучать специальную литературу, ходить на семинары и тренироваться на демо-счете. Все это теперь есть в инвестиции 101. Это первая в России онлайн-платформа, на которой мы собрали все, что нужно для обучения инвестициям и трейдингу. Смотрите видеокурсы на любые темы, связанные с инвестициями. Сохраняйте видео для просмотра офлайн. Выбирайте уровень сложности курсов от новичка до профессионала. Проверяйте с помощью тестов, как вы усвоили материал. Учитесь зарабатывать.
So we continue to talk about potential infections stabilizing in Hong Kong, also in China. Are you seeing any difference when it comes to your business in your different properties?
Definitely. Depends on when the border opens, depends on which city, when travel restriction will be released and lifted. There's definitely different travel behavior across different cities in Asia. So that's what we're seeing. So China has, started, traveling. We're seeing numbers picking up in China. In Hong Kong, in fact, we have had a very steady growth in market share because we are one of the earliest to react to the pandemic. As health and safety is really our priority, we're pioneering in upgrading our hardware in terms of making our aircon as well as sanitizing, working with medical grade disinfectant and preventing coating within the hotel premises. As well, I think also what's very important for us is training of staff. So hence our occupancy numbers in Hong Kong has in fact been really outperforming our peers in the last few months.
But Hong Kong has suffered not only from the pandemic, but also from the months and months of ongoing protests. And even after the pandemic is over, there are concerns that the protests will just be reignited. So how do you prepare for this eventuality? How do you really go on with your business in Hong Kong when there are so many challenges stacked up against you?
COVID is definitely a challenging time already for the hospitality industry as well as retail and restaurants. So we do hope that there will be some peaceful solution and, indifference can be resolved. However, the social unrest, may continue in a smaller scale. So in terms of our cost and all that, we're definitely looking in how we balance between fixed costs as well as variable costs. And also with tourism arrivals and all that, we are already pushing for much more local traveling, staycation packages, etc. And also working with kind of cross-border corporates for their staff for more long-stay programs.
Winnie, how quickly do you expect corporate travel and business travel to bounce back?
It depends on city by city. For Hong Kong, that's again, we are, as a group, we are already having quite a lot of corporate guests staying with us because of the cross-border closure. So we are actually seeing a pickup in our group on that because, but again, it's more long stay versus the short stay. When it comes to when the corporate will pick up, again, it really depends on when the border opens as well as the travel restrictions being lifted and relaxed.
So with so many, aspects of uncertainty, what are you doing when it comes to staffing arrangements?
For staffing arrangement, we are having, with the government policy and subsidies coming in, we've actually successfully not laid off any of our staff in Hong Kong. We've kept all their jobs. And really, again, this is our priority during this time to look after our people.
Will that need to be readjusted if the pressures continue in your business? And what would the factors be there?
As I mentioned earlier, I think there will be a shift in the balance between fixed costs and variable costs. Hence, part-time, there will be maybe, we are keeping most of our full-time staff. The part-time staff will be really on the basis of when you need them.
You have talked about potentially more properties being planned and in development, in the pipelines. Have all of these pandemic challenges, protests affected your future plans?
No, in fact, all the construction sites are still open. So pipeline hotels are all coming on board. So it hasn't really affected our going forward.
Winnie, how closely are you working with government policymakers to ensure that the hospitality and travel sector gets through this with the least amount of impact, particularly when it comes to unemployment?
So in Hong Kong, government has come up with their subsidy as well as the employment scheme, which enables us to keep our people, and they come up with the 9,000, which allows us to, it's almost 50% of our workforce that can benefit from this scheme. Again, in different countries, there are different schemes that we will be working very closely with the government to keep our people, as that's really the most important to our group.
We've heard in recent days, some of these plans from airlines to resume travel, but there's so much uncertainty about what travel, be it business or personal, is going to look like on the other side of this pandemic in terms of social distancing, in terms of the numbers of people that will actually, be going overseas and leaving their borders, right? So is there a sense that there could be the need for major changes, I should say, particularly when it comes to capacity in your business?
So the major, the major changes, we feel that it will be a few things. First of all, in terms of our distribution channels, you can see that because domestic travel will be more and more important, and there'll be much more continental travel coming along. Places like Japan, Australia, as well as China, whereby they have over 70% of domestic travel will really benefit from the recovery in the next 6 to 12 months. What we are seeing in terms of our distribution channel, there will be a lot more collaboration with local businesses. There will be a lot more database sharing. We as a group have already started working with telecommunication companies, credit card companies. There will be more gift cards, pre-sale packages, and promotions coming out. So I do think that it's a good time to search for good deals as well as plan for the next vacation.
Супер скидки на технику Haier в интернет-магазине DMS. Успейте купить цифровую и бытовую технику Haier с выгодой до 40%. Совершите покупку онлайн и получите товар в день заказа.
Grammarly does more than catch errors. With Grammarly, you can find really good, no, perfect words that make your writing.
Just give us a snapshot of how your business has been affected, of course, in Hong Kong, not just by the pandemic restrictions, but also 12 months of the social unrest as well as what you've seen in terms of consumer behavior on the luxury front in China.
Well, I mean, first of all, despite the unrest that we've seen and the disruption that the pandemic has brought, we've been in the fortunate situation in that our businesses have stayed operational, both in Hong Kong and in Greater China. And that's enabled us to keep the cadence of the business, and it's also enabled us to stay very much connected with our customers. And so our teams have been very focused on making sure that they are using social platforms, that they're engaging with our clienteling apps, that they're using Zoom to have trunk shows. We've been doing live streaming from the stores, all in an attempt to be able to stay close with our customers and to be able to share with them, the fact that it may be difficult to get to stores, but we've got fantastic product and we've got great assortments, and that we can personally connect with them. And I think that that's helped us as we now start to see certainly the situation in mainland China coming back to some kind of normality. Clearly, having been through the social unrest in Hong Kong, that gave us the... Sorry.
No, sorry, continue.
No, I was just saying that, having been through the social unrest in Hong Kong, that enabled the teams, I think, to be a lot more agile, to be a lot more creative in terms of how we were responding to the situation on the ground. And so when it came to then putting in place new protocols for COVID and looking at, how we were making sure that the health and safety of our teams and the health and safety of our customers was our primary concern, that we were able to move quickly with those adjustments to our operating procedures.
How much of the growth that you've seen has been in digital? Tell us about the numbers, if you can, in terms of how much uptake you're seeing across online ordering and e-commerce through your websites.
Well, clearly we've seen a spike in terms of the digital penetration, and we've seen more customers now becoming more comfortable with shopping online. I would say that it's very difficult to look at it in a black and white, because I think that increasingly what's happening is that customers are becoming very comfortable with lots of different digital channels. And, as I said earlier on, we're using digital very much as a way of communicating and staying in contact with customers. And so whether that be on a Zoom or whether it be on a live stream feed, people are being able to use different channels to connect. And indeed, those channels are now becoming shoppable as well. And so it's not just about .com shopping, it's more about the holistic approach to how do we continue to stay in touch and relevant and personal with our customers.
Will you be changing the ratio of your brick and mortar stores across China and Hong Kong against your online presence? Because what we continue to see is this trend that despite the fact that retailers are struggling, their online sales are surging.
Well, what we're seeing is that, we have a strategy where our brick stores are really there to create the theatre and the immersiveness of what we do as a global curator of the best of luxury product. And so clearly there's a physicality there and a human connection, which is really important for our customers. And we're seeing that particularly in China as customers are coming back. They really respond to the level of personal service we can provide them, the safety of VIP suites, and the intimacy that brings. But clearly online gives us access to newer customers, and we're seeing beauty purchases, and we're seeing customers that we wouldn't necessarily have seen coming into the stores accessing through the digital platforms. We have a very personalized approach to how we edit the assortments with the China stores, and so each store has its own buying strategy that's applied to it. But clearly the benefit of online means that all of that product is available. And so we will continue to look at how we can further penetrate the digital presence within particularly mainland China.
Does that mean that you are not making any adjustments, whether it's cost cutting, because we have continued to see more and more retailers having to adjust their business operations given the pandemic and in Hong Kong, the protests as well?
Well, clearly we are very mindful in terms of how we're utilizing our resources and how we're focusing in terms of how we can really drive differentiation and where we can get the value add. And so, obviously, discretionary spend is something that we're very focused on. But I think it's important that at times like this, that we really go above and beyond to create specialness for our customers. It's an opportunity for people to fall back in love with fashion. And I think what we're seeing in China particularly is as people feel safer and they're coming out of their houses, the joy of being able to embrace, reunion dressing. What am I going to wear when I meet my friends and family for the first time after months? There is a little bit of revenge spending happening, spending against COVID. And so clearly there's a human need, I think, to feel uplifted having been through this experience. And we're starting to see that with the behaviors of our customers. And we're also seeing in China, we have customers coming into the stores telling us that they wouldn't normally be in China at this time of the year. And so, they feel that this is an opportunity for them to come out and to shop in China where they may have been, in other parts of the world at this time.
Andrew, I'm really curious because your competitors, Net-a-Porter, Matches Fashion, every day there's just emails in my inbox, 20% off, 30% off. There's so much discounting. US retailers are going out of business. We're seeing, vouchers being used to incentivize spending. In Hong Kong, for example, the very premise of a luxury good is tied to exclusivity and its inherent value status, right? So how does that kind of play out when there's so much heavy discounting for these brands going on?
Well, I think that's an excellent point, and it's something that the industry, I think, has recognized. One of the benefits of being in isolation is the fact that, or in lockdown, is the fact that, digital platforms enable us to get together. And so there's been a number of forums that have been industry-wide over the past month that have been really looking at how we can deal with the systemic discounting that has happened in the industry, the overproduction that we have, and how can we look at getting the seasonal cycle of retail back on track. Because, to your point, it's really quite disingenuous to the customer to be, asking them to come and buy a winter coat in September, and then by October that coat is on discount and you haven't even had a chance to wear it. And so there's a number of people working across the industry with retail designers, brand CEOs, to look at how we can come together to be able to address some of these issues.
So your company is really into everything, right? Whether it's footwear, luxury, clothing, jewelry. Is there anything in particular that's selling more than usual during this pandemic and the protests?
Yeah, we're a luxury specialty store and we cover obviously fashion and lifestyle and all those other categories. And what we're seeing is that, clearly as people have been trapped in their homes, that they've been looking around and they've been thinking, well, okay, it's a chance to, upgrade my furniture and look at how I can rejig my house. And so homeware has been an area that we've seen particularly growing. We've also seen an increased interest in wellness products. So people looking at how they can look at, organic and pure skincare. There's definitely there's more of an awareness in terms of responsible product. And then when it comes to fashion, we're seeing people coming in and really looking at how they can invest into pieces that are going to last them over a number of seasons. So, there's wardrobe essentials that you're going to love and cherish for a number of years. And so clearly there is changes in terms of, consumer sentiment and how people are making decisions about what they buy.
We know that governments and central banks around the world have really tried to stimulate their economies, and yet about 2/3 of the world's population in developing economies don't really have the fiscal or the monetary capacity to help their own economy. So how big will this gap be between the richest and poorest countries, and how will that affect the recoveries?
I think that is indeed one of the biggest challenges that we face, is that this is a universal crisis, but it doesn't affect us all equally. And that is the reason why we've been calling from the outset for a consolidated and coordinated international response to help those countries that are not in a position to make the massive stimulus and support packages necessary out of their own resources, that they can respond and prevent their economies from declining even further. This is indeed one of the biggest challenges as we look past the immediate crisis to the recovery, is that in many countries there is just a simple lack of resources to recover quickly, and that the investments that are needed, the sorts of support to country economies that will help the recovery, will simply not be available without this kind of international support.
Will the pandemic just make inequality that's already been rampant, not only in developing economies, but even in advanced economies, just become worse?
It certainly will, because as I said, it doesn't affect us all the same. This crisis has disproportionately hurt people who are in low-skilled and low-wage jobs. Those who have occupations that they cannot do from home, but are supposed to be out there in close proximity to others, they have found their sources of livelihood closed down under their feet, and they have no way of earning an income, and they're falling farther behind. It's the same thing with some countries as well. We have countries that are very heavily dependent on commodities. The demand for their exports has fallen back, so their export revenues and their fiscal revenues have been desperately shrunk, and they are now in an even worse position. Many of them are actually facing a possible debt crisis for lack of resources to service the debt or to support the economy. So it really is a tremendous problem from the inequality perspective. And if the crisis continues for very much longer, we will certainly find that more and more people will fall back into extreme poverty.
And Elliot, I suppose the kind of tragic irony is that in that way, that's why a lot of economists are expecting that developing nations, emerging markets are going to recover quicker because, as you say, people were not taken into lockdown, people were still going to work, they didn't have the luxury of being able to work from home or to have economic activity stop. Is that what you would expect to see in the top line data in terms of how the economic recovery plays out in developing nations versus developed ones?
Actually, no. I think we will find that most of the developing economies depend so heavily on demand that comes from the developed economies that until the developed economies really start the recovery, the developing countries will have very little prospect of doing much better. I think of countries that are heavily dependent on tourism, for example, as a source of GDP, a source of income. Until tourists start reappearing on their shores, there's just really very little that they can do. The same thing with the commodity-dependent economies, as I mentioned a little earlier. Until production picks back up in the bigger economies, the middle-income countries and the high-income countries, the demand for their exports will simply remain weak, and there's nothing that they can do about that in the short term. And so, no, I do think that we see in this crisis the close interlinkages of all of the countries of the world's economy, and we will stand together, we fall together, and we will recover together. And this is why we think that this coordinated international response is in everybody's interest.
И он меня, в общем, спрашивает. Он говорит, с чего начать в интернете? И я ему говорю, с чего? С создания собственного сайта. Ребята, всем привет, меня зовут...
How much of that does that go to China? Because these interlinkages between small emerging nations and Beijing's debt aid and Belt and Road and the number of other initiatives that have taken place through Beijing's economic and soft diplomacy are immense, right? So how much is that recovery also tied to a robust recovery of China and its ability to be able to uphold, you know, the debt and financial aid promises that it's made?
Well, I think for any of the larger economies, the Chinese economy is the second largest in the world, the American economy as well, then we have we need not overlook the European economy. Until demand and production in these economies really is resuscitated, global economic performance is going to be subpar. There is no doubt about that. China happens to be a critical cog in the whole machine of international trade and the global supply chains. It is a very important player there, and its recovery will be a part of the recovery of these supply chains, the recovery of global trade. But again, I think it is not only a question of China. China was perhaps the first country that was deeply affected by the crisis, the first one to shut down. It is also one of the earliest to start the reopening process. But again, I do not think that reopening the economy is going to be quite as straightforward as shutting it down was. And so it's going to really require that markets around the world are gradually reopened and that demand picks back up. And all of the major economies will have a role to play in bringing economic performance back to anything like the levels we had before the crisis.
Elliot, to your point, given that we are really risking second wave infections that we've already seen play out in countries like China or South Korea, do your numbers, your new UN report that says that we are going to see the global economy shrinking more than 3%, does that factor in potentially more infections down the line?
Unfortunately, no. This is what we would call a baseline assumption, where we are hoping, as I think we all are, that we are able to reopen the economies around the world in the course of the second quarter of the year, so through June and into July, and that by the third quarter, economic activity is starting to pick back up. Now, of course, if we have a second wave of infection and governments find themselves obliged to shut things back down, then of course that is a very optimistic projection, and we are likely to confront a significantly worse outcome for this year. We have to hope it doesn't come to that. We have to do everything we can to minimize the risk of further flare-ups in the infection rates. And certainly we have to all cross our fingers and hope that we get a vaccine as soon as possible, because I think that will be critical in the ability of countries to reopen. That sense of confidence that's lacking right now among consumers, that can really only be reestablished when they're relatively sure that they're not putting their lives at risk.
Exactly. That was going to be my next point. How do you see the recovery actually playing out? Because there's a lack of confidence, right? There's no vaccine. So even if we see demand come back, in what shape? Will it be pent-up demand and people really going out and shopping and bringing back economic activity? Or will it be really cautious and muted?
Well, I think it's going to be cautious from the public health perspective. People are going to be trying to avoid crowded spaces to the extent possible. But let us not forget that this crisis has caused a tremendous hit to people's income. We are projecting that we will have lost globally, by the end of next year, some $8.5 trillion of global output. And that cannot remain without impact on people's consumption. People are going to be focusing first on the essential things. They won't be suddenly running back out, I think, at this stage to catch up on the type of consumption that they missed out on because the stores were closed down. They'll be buying the things that they need first and foremost. And gradually, I think they'll pick back up. But again, a key point here is confidence. They have to be relatively sure that it's okay to spend now, because there's little likelihood of them sort of losing income again in the near future. And until we have a relatively clear sense that we've got the public health crisis under control, that niggling doubt will always be there, and it will impede people's desire to go out and participate.
Elliot, just finally, let me ask you about the labor force post-pandemic, because we have seen this outbreak really disproportionately affect the elderly, who have been a crucial part of the part-time job market as well. What will the labor force look after this pandemic is over?
Хотите купить квартиру себе и своим детям без ипотек и кредитов? Если нет,
Как вы заебали.
Well, I think we will see a shift. There will be a shift in the nature of jobs, because one of the things that has become clear through the reaction to the pandemic is that there is a lot of economic activity that actually can be conducted online. We see people working from home where possible. We see a lot more retail being handled through the internet, with delivery services really exploding, and the online retailing as well doing extremely well. Now, we have also heard, and I saw in your previous segment, that we were talking about changes in the way firms think about how they do their business in the future, that they may need much less office space because so much of their activity can be done online from their workers working from home. And we may very well find that there will be a lot more automation, a lot more use of technology and digital technologies in particular, simply because people realize that this is something that allows them to maintain a certain continuity, business continuity, and it provides them with a buffer, if you will, against any further outbreak of disease, but also against the sorts of uncertainties, if you will, that might plague the recovery going forward. So I think we will see a shift in the nature of work, an acceleration of an already ongoing transformation, but we will also see some changes in the way in which we put the work together and where we carry it out. And hopefully this will not be too disruptive, but it is a transition that I think is not going to be stopped anytime soon.
Robin, you've made some big announcements on which seats are going to be available and how you're going to secure passengers on board. I guess the big question that everybody's asking themselves at the moment is it safe to fly?
Hi, Guy. Good to see you again. Thanks for having me on. You know, when I think about the miracle of flight, right? I mean, no one gives a second thought on getting on an airplane, and millions of flights happen every year. And then 9/11 came, and we responded to the security challenges, and there were concerns back then about people saying, I'm not going to fly again. And I think what we're facing now is another real concern that people have with this COVID-19. And I think the industry is really stepping up to the plate and doing a lot of things to make flying safe so that people can feel confident about flying with us in the future.
So that's a yes?
Yes.
Okay. Clearly, kind of limiting the number of seats that you're going to have on board is going to have a meaningful impact in terms of load factors. So how does this affect the economics? If you take out one seat from every row, how does that change the economics of flying? What sort of load factors does that mean you're going to be operating with? What is an economic load factor to break even? And how does it compare with what you were looking at before?
Yeah, so for the industry, break-even load factor is normally between 75 and 80%. So the fact that we're capping flights and keeping middle seats free, keeping aisle seats free means obviously we're going to be limiting flights to below that break-even load factor. So it's not sustainable in the long term, but it's very important right now. And it's one of those things that we're doing to give people a little bit more confidence, a little bit more comfort about flying.
One of the other factors that obviously is going to be affecting the way that we all fly is that it's going to take longer to get on aeroplanes, it's going to take longer to get off aeroplanes. Cleaning is going to be something obviously that you're going to have to do a great deal more of. For a low-cost carrier, turnaround times are absolutely important. You want to have the aircraft in the air flying as much as possible. So how will turnaround times be affected, and what again does that do to the economics of any given route?
Yeah, it's a great point, and I think you know, out of any crisis, there's always good things that emerge. And I think one of the things that will change for good in our industry is the cleaning and sanitization of airplanes. I mean, it was good before, but I think it's we're all taking it to the next level, and that will pressure turn times. Again, it's not really an issue right now, Guy, because we're capping flights to, you know, under 60% load factor. We have extra airplanes we can bring in. We have a lot of airplanes like other airlines parked and sitting idle. We can bring in if the number of flights resume, and then over time, I think we will adjust. And I think longer term, you will see increased turn times as an industry trend. And you know, we'll have to manage it as we've managed other things that have been thrown at us in the past.
Just in terms of kind of how you see demand developing from here, we have a sort of proprietary tracking system that looks at the seat availability that is out there at the moment, and what that is telling us is that you are starting as of June the 8th to put many more seats out there, roughly a kind of doubling of what you're offering now. Are you testing the water? Are you trying to figure out and understand what demand looks like? And what kind of information are you getting back?
Yeah, so you know, I would describe since the beginning of April, we've been bumping along the bottom. We're now bumping off the bottom. You know, one of the things I look at every morning is the TSA data that shows how many people flew through the checkpoints the day before. And, you know, as an industry now, we're seeing about 8 to 10% of what we would normally see. So we've definitely seen some small improvements. You know, we think in June there's going to be more demand for flying from May. We're seeing that in some of our forward bookings. Again, we're very cautious, but we expect to fly our June schedule probably between 70 to 75% of what down of what we normally fly, whereas in May we were flying 85 to 90% down on what we would normally fly.
And what kind of traffic is it? Like, is it the kind of visiting friends and relatives kind of traffic? Is it leisure traffic? Is there any business travel in there?
Yes, well, there's still a lot of essential workers flying around, medical personnel, people in the distribution business, definitely some visiting friends and family, people returning back to the Northeast who left the Northeast just before this pandemic broke. So it's a real mix. And we're also seeing into the summer some small interest in vacation travel as well. We're talking to a number of sort of our vacation markets, particularly in the Caribbean, to understand better their opening plans.
You don't see a lot of business traffic, and you've certainly been trying to change that over the last couple of years. Is business the last to come back? Do you see business coming back in anything like the same way that it did before?
Yeah, I think business will come back more slowly. I think that we're all sort of finding things like this are worth a lot better than we thought. We're about 80% leisure, 20% business. I feel good about where JetBlue is. I mean, we have a largely domestic network. The international flights that we do have tend to be close to home. I still think there's going to be a concern for a while, people traveling too far from home. I think we're going to see some different quarantine rules get put in place around the world that's going to confuse people. So I think business travel will come back a little bit more slowly. I think probably on business routes where we may fly 8 to 10 a day, we'd be flying maybe 3 or 4 for a while until demand comes back.
What about transatlantic? You continue to say that it's going to happen in 2021.
Yes.
Is it now late 2021?
It's later 2021. We are still committed to do it. I mean, we think that actually by late 2021, demand between Europe and the US should be largely back to where it was. And we're going to have the same old problems of legacy airlines gouging people with very high fares. So we still see a great opportunity for us to come in and make significant price reductions to make traveling across the Atlantic.
Just when you look at what is happening with that transatlantic story, Gatwick, a number of airlines have withdrawn from Gatwick and are retrenching back to Heathrow. Certainly seeing that with the likes of Virgin. Virgin is under stress. Do you see the possibility of extra slots becoming available?
Yes, I mean, we've always said we see the path into more than one London airport, and I see an even wider and brighter path now than I did then.
And you mentioned what is happening with the legacy carriers. Michael O'Leary has been very kind of outspoken on his kind of perception of what is happening here. He doesn't see this as being a level playing field in terms of the aid that is being handed out to the likes of potentially Lufthansa and Air France KLM. What's your perspective on that?
Well, I think in the US, we've been very lucky. The US administration acted very quickly with Congress. They passed the CARES Act. And actually, we received payroll support assistance, as did other airlines. And that's allowed us to pay our people and keep our people on. JetBlue, like other airlines, hasn't furloughed anybody. We've got everyone on the payroll. That commitment lasts through to the end of September. And the reason for that is when the economy comes back here, the aviation industry is so important to help businesses and help people get going again. And if you furloughed everyone and there's no one around to fly the airplanes, it will just hinder the recovery. And so the industry in the US is very thankful for that. We're very thankful for that. And we're ready to serve when things get going again.
So what happens in Q4 if things don't get going again? Like as you say, it kind of runs until the end of September. What then? If we haven't seen a pickup later this year, how do you react? How do you reposition the airline at that point?
So, I mean, we've always had a low-cost structure. We've always, I think, been very careful about how we plan for growth. We have a relatively simple fleet. As I said earlier, we have a network that is largely U.S. domestic, or the international we have tends to be Caribbean, Central, a little bit of Latin America. We don't have any wide-bodied airplanes. So we do believe that these are the businesses that will come back first. Having said that, I still think it's highly likely that when we get to October, we're going to be a smaller airline, a smaller industry, and we're going to attempt to do everything we can to manage that through voluntary means. JetBlue's never furloughed a crew member in our 20-year history. We're proud of that. We'd like to continue that. But we also recognize that we are going to be smaller. We've had great success already. About 14,000 of our 23,000 crew members have taken some form of voluntary time off. And that's really helped us get through this in a way that is sustainable.
If it came to it, though, do you think you could see yourself, for instance, withdrawing Mint? Is that a possibility at the front of the plane? Could you see yourself withdrawing from certain cities in terms of the network that you're operating at the moment? Is there, like, there is a people effect? Is there a network effect as well, and an offering effect in terms of what the business could ultimately look like?
Yeah, that's a great question. I mean, I do think Mint will bounce back strongly, so we certainly have no plans to withdraw from Mint. I think that I think what it's going to look like is, the leisure markets where we may fly once a day, we'll be flying maybe 3 to 5 times a week for a while until demand comes back. For business markets where we may be 6, 8, 10 flights a day, we'll be flying 3 or 4 flights a day. I don't see longer term any changes to the places that we fly. I feel pretty confident that everywhere we fly today will bounce back eventually, albeit we'll have less flights for a while.
Talk about your general assessment of the demand picture in the energy market.
I mean, in the entire energy market, we are seeing the early signs of demand recovery, especially on oil, for 2 reasons. One, the gradual lifting of lockdown in many countries around the world, Europe, China, and North America. They are giving a lifeline to oil demand growth. And second, we also see the economic activity around the world is getting some life. And as a result of those 2 effects, we are seeing a gradual recovery of demand. But we are still, of course, in the negative territory compared to a year before.
In other words, even though we are seeing some demand come off these lows, we might not fully get back to where we were before the COVID-19 pandemic anytime soon.
I do not think so. It will require a major economic rebound. Whether or not we will see an economic rebound next year or towards the end of this year is a question mark. If we don't see it, to expect a big recovery of the oil demand will be rather on the optimistic side.
Fatih, as you've been sharing your views on the outlook for energy, you've also been calling on governments to put clean energy programs at the center of their COVID-19 economic recovery plans. Can you elaborate a little bit on what your message is all about?
Yeah, this year we are seeing the largest decline of global emissions in the history. A big decline, but this decline in the emissions, of course, good for the climate change, but it is happening for the wrong reasons. It is not a development that we should be happy about, because it is happening because of the premature deaths and also economic trauma. It is not happening because of the right energy policies. If we want to see a real decline or keep the emissions at these levels, we need to inject right energy policies in the recovery stimulus packages the governments are preparing around the world. Only and only if this happens, if the right energy policies are included in the recovery packages, we may see an energy system of the world which is more resilient than today's, which is much more moderner than today's and which is much cleaner than what we have now. So therefore, I believe there's a historic opportunity for the governments to include the right energy policies in the stimulus packages, which is in many cases around the world once in a generation in scale, those recovery packages.
Let's use Canada as an example, Fadi. What's been your observation of the policies here, and do you feel Canada's energy sector is doing enough to make these improvements on things like sustainability?
I think Canada is, in my view, an exemplary country which provides energy to the world, which energy means better lives, economic growth, comfortable lives, but at the same time, Canada is good in terms of being one of the leaders of the clean